Does it work now? Okay, perfect. Thank you. We're going to start. Yeah, it does work because we tested it, but most of the people don't yet have their headsets on. So you need to put on your headset in order to hear me. Yeah. This is how it works. Yeah, I think that's. Does it work for everyone? Do you hear me? Okay, perfect. Let's see. Yeah. Okay, fine. Very warm welcome to everyone. I need to get used to this setting with headphones where I hardly hear myself over the mic, but it seems to be working. A very big welcome to the audience, big welcome to the speakers of today. I know that some of you only landed this morning, which is amazing to be then so dedicated and speak on our panel. We have an audience at home because this session is live streamed. So everyone, welcome. The reason that we're organizing this is because there's a huge need. So I hope that everyone throughout the session will feel the sense of urgency. Because of climate change, we need to start allocating an increased amount in investments towards making sure that we reach the goals of SDG 6 and allow people to have access to clean water and sanitation solutions. I'm the managing director of Aqua for All. My name is Josien Sluis. I'm with the organization for 5 years already, and I have a background in impact investing. I started my career with the Rabobank, and then I worked for the Dutch impact investors, and I noticed that the solutions that are out there in the market can be structured in a different way for us to match and make sure that there's an increased commitment from private investors towards SDG-related topics. Our current portfolio, including leverage, is 140 million. And if you look at the leverage that we create whilst applying the approach that we take, is 1 in 7. So we have mobilized quite some private capital for the sector because we understand that public and philanthropic capital alone is not enough to make sure that clean drinking water is available for everyone. So we need to take a different approach. We started to build a team that is able to structure blended finance solutions for the water sector, and we're going to show you in this panel a variety of solutions that have been very successful. And I'm very happy to introduce you to speakers during this panel. I'm going to take you along in the setup of today. It's a 1 hour and a half session, and we will take you along the journey of catalytic instruments for water. So in our first panel, we have the EIB, who structures first loss for funds with funding of the Ministry of Foreign Affairs of the Netherlands. We also will be listening to an insurer that is unlocking its potential to claim its very important role in providing de-risking. And of course, we have the Green Climate Fund, who is able to play an important role in scaling these kind of initiatives. In our second panel, we will address investment cases and share insights of funds that have been set up and a variety of blended finance solutions. Our final guest will speak about what's next and how can corporates play a very important role in also mobilizing the much needed private capital. And we have the Commissioner of Health of Uganda, who is a big promoter of public and private collaboration, because there's of course a common understanding that public budgets are not enough to also make sure that we have clean drinking water and sanitation solutions. So I want to invite Mrs. Wampi Libun on stage to do the opening remarks. The Ministry of Foreign Affairs has been our main funder and trusted partner over the many years. So I want to give you the floor, and thank you so much for joining us.
So thank you, ladies and gentlemen. Really great to be here. So this is really a session about water, climate, and money. We have a big challenge to achieve the SDG 6. Of course, all we know, it's a sustainable development goal that in 2030, everybody should have access to drinking water and safe sanitation. Just to look at the challenge. So today, about 2 billion people don't have access to safe drinking water. And over 3 billion people don't have access to safe sanitation. And as 224 is almost over, we only have half of a decade left to achieve the goal of SDG 6. So climate change even makes it more difficult and the challenge even bigger, because the dry periods get more severe and extreme weather causes big floods and damage to infrastructure, like we have witnessed in Spain, but of course also in Nepal and South Sudan only this month. So every year we need to invest more and really invest billions of euros to achieve the SDG 6. There is clearly an enormous funding gap, because budgets of governments are really not sufficient. And even if we add more donor money, it still will not be enough. So, however, I also see a big opportunity, because there are also a lot of investors with billions of euros that really are looking for reliable and profitable business opportunities. And so these are the ones that we try to lure in. So pension funds, impact investors, they are currently investing in agriculture, they're investing in energy, and we really think they also ought to be investing in drinking water and safe sanitation as well. So in this session, we have really a great team of experts. So we have representatives of the European Investment Bank, the Green Climate Fund, the government of Uganda, private investors, insurance companies, and Aqua for All. And so for my department in the Netherlands, we have worked with several organizations over the years to really use our government subsidies to catalyze private investment and scale up. So scaling up investments in water and in sanitation in developing countries. And I'm quite proud of what we achieved the last 5 years. We have been able to prove that blended finance is not really only a promising concept. We can really also deliver and have practical results on the ground. So in the first place, successful investment in financially viable drinking water and sanitation companies have been done. And also in the financial sector that contributes to building climate resilience, we have increased positive impacts and improved people's lives worldwide by adding drinking water and sanitation to the portfolio. So financial sector players put drinking water and sanitation in their portfolio. And during this side event, the examples and exact details of investment were put in for you so that we can discuss these and we can learn from each other. So I really think to close, we have a big challenge to accelerate the progress to achieve the SDGs. And I'm looking really forward to working together in the next years to support more impactful financial solutions to achieve this goal. And really, I think we'll have a big challenge ahead, but also at the same time, huge opportunities that we have to fulfill together. So I look forward to the panel discussion, and back to you, Sien.
Thank you, Wampi. It's been wonderful your words to complement what we are trying to achieve. And I'm going to give the floor to Andrea, who is here as a representative of the EIB. Please come to the stage and do your opening remarks. Thank you.
Good morning, everybody. Dear Vice Minister for International Cooperation of the Ministry of Foreign Affairs of the Netherlands, dear distinguished audience and esteemed colleague, it's a pleasure to be here with all of you today, opening this event on behalf of the Vice President of the EIB, Ambroise Fariol, addressing the role of blended finance in enabling climate-smart solutions for water and sanitation in emerging markets. Climate change, biodiversity loss, food crisis, energy crisis, poverty, all have a common denominator: water. Investing in water brings many co-benefits. Water is at the center of a poly-crisis era, but water is also part of the solution. This is why water must be very high on our agendas. Availability and sustainable management of water and sanitation is one of the most critical challenges of mankind. EIB is committed to this challenge, being one of the world's largest multilateral lenders to the water sector. During the period from 2019 to 2023, the bank signed on average 3 billion every year of water projects, both within and beyond the European Union. What it is important to underline is that if outside the EU operations for the bank account for more or less 10% of the overall activities, water projects account for more than 30% of the overall activities of the bank outside the EU. Water does not attract a large amount of either official development assistance, ODA, or private sector investments. Between 2011 and 2019, the water sector attracted only 5.4% of ODA worldwide. The private sector provided only 9% of all project-level infrastructure investment in water and sanitation, for instance in 2017. In contrast, private sector investment makes up 17% of project-level infrastructure investments in sectors such as energy, transport, municipal solid waste, and communication. And the investment needs in water-related infrastructure have been estimated in 6.7 billion by 2030 and USD 22.6 trillion by 2050. The EIB is increasing its activities in water. Water has been listed as one of the 8 EIB top priorities by our president, Nadia Calviño. Today a water program is being drafted by the EIB, which will raise the lending volumes of the bank to around 4 or up to 5 billion every year. However, increasing the volume is not enough. EIB is also diversifying its approach and actions on water in terms of financing mechanisms, partners, financing tools, and technical solutions. The EIB is active in those fronts with concrete operations in the making, already in implementation. Projects outside the EU delivering high impact often require a concessional funding. The use of blending structures is of particular importance when operating in developing or fragile countries. Blending structures via fund have become an integral part of the EIB financing landscape to catalyze funding or otherwise increase the development impact of investment projects or programs, enhancing sustainable growth as well as the effectiveness and efficiency of the operations. This much needed yet scarce support to provide technical assistance for project preparation, investment grants to reduce financing costs or to finance high impact investment is provided by national, institutional and other donors. The government of the Netherlands is one of our long-standing partners, helping to deliver impact in the water sectors in geographies where it is needed the most. One illustration is the investment of euro 10 million into the Water Access Acceleration Fund, which is emblematic for all of us as it reinforces the EIB, the government of the Netherlands and ECOFIN joint support to the water sector in emerging markets, where innovative investment solutions are much needed. This fund has a mission to supporting the private water sector, backing local actors in challenging regions. The fund supports water businesses and provides equity capital to innovative water solutions and services brought to end clients in Asia and Africa. The catalytic role of the EIB in this operation is undeniable, since the Water Access Acceleration Fund already benefits from the support of developing investors, including APA for All, IFU and Norfund, but also private institutional investors, such as Danone or BNP Paribas, for instance. EIB prides itself in investing for the long term and developing sustainable relationship over the years, ensuring high development impact and sustainable growth to its partners and beneficiaries. Thank you very much for your attention, and I look forward to be again with you in the panel in a few minutes. Thank you.
Thank you so much. I want to invite the first panel on stage. Andrea, so please take your seat as well. And then, of course, we have Anthony, yes, of course, or in the middle. And Amkat, please join us for the panel. So, Andrea, you're part of EIB since 2007 already, and your experience is really very wide in the sense that you have been working in credit risk management and structured operations, and that you've been doing a lot of trajectories, including leveraged project and infrastructure finance. Welcome to the stage. Anthony, you're deputy chair of the Climate and Risk Resilience from Howden Group. There's a long list of advisory roles that you have, so I won't mention them all separately. And you're a deputy professor at the Singapore Technology Institute. Thank you so much for joining us in this panel. And we have Amgat, the regional manager for MENA. You're responsible for Green Climate Fund operations in MENA. And before joining the Green Climate Fund, you directed the R4D business portfolios for MENA at the International Water Management Institute. You have a big water heart, that's what we've known already from the many discussions that we had. And especially in MENA, of course, water is a very big issue that we're going to address in a minute. I'm going to give you each your 5 minutes to do your own introduction and be as concise as possible, so that leaves us a little bit of room to have a discussion afterwards. Amkat, can I ask you to please start?
Good morning, everyone. And so, as Josian said, so I'm the regional manager for MENA region at Green Climate Fund, but I've been working in the sector for like over 25 years. So I've been trained as a hydrologist. I think it's one of the key challenge in the water sector really is how to mobilize really private sector, because if we look at the capacity of the sector in terms of finance, it's very much rely on public sector finance. And public sector finance, if we look at the international economy, it's a very challenging, it's a declining, so there is a clear role to look at how we can actually mobilize the private sector where most of the money is located. If I give you a quick snapshot on the MENA region, so the MENA region require almost like 600 billion that for to be able to adapt to climate change and deliver on the NDCs. If you look at the capacity of the money that's sit in the banks in the MENA region, it's almost 46 trillion. Already the money is sit there, not invested, because they are reluctant to invest and they don't see really what is my revenue stream here. And I think that's the role of the climate finance. And this is where we try to bring the climate finance to be able really to de-risk the investment for the private sector, take all upfront cost, and be able to mobilize the private sector. And we have few examples we can share it with you, but I will leave this for the discussion.
Thank you so much,
Yep.
Amkat. Anthony, can you please introduce yourself?
Yes, and actually I might. Oh, good. I was about to say, could someone take a picture? So I always like to write these things up on LinkedIn, so it's good to have a photograph. So Anthony Hobley, Deputy Chair, Climate Risk and Resilience. Also, the other role, which I think is very relevant to this conversation, is I'm co-lead for insurance now for the high-level champions, the high-level climate champions, building a 2030 enabling climate insurance breakthrough. This is the first COP, where the first climate COP, where insurance is actually on the agenda, and not just in the room, but as Barbara Buchner at CPI has often said, but actually now I think at the table. And I was speaking at a round table of the great and the good at breakfast last week from the climate finance space, so an area I've been in for nearly 30 years, fairly new to insurance, but therefore asking some fairly basic questions from the sort of ground up, which, if there's one thing you take away from this COP and even this conversation, because I know you're being bombarded with lots of facts, figures, ideas, is if finance is Popeye, then insurance is the spinach. And for any of you who sort of follow the cartoon character, you know that the Popeye is pretty anemic. He doesn't have a lot of strength until he takes his spinach. And I think the whole base of this conversation is a realization that that is the problem we are facing with climate finance, but I think it's exactly the same conversation here around water and sanitation. You know, I have lost count of the number of conversations I've had on the finance side of the equation, which is, look, we've got all the money. You know, we're ex-bank. We've made a commitment to mobilize 5 trillion in climate finance by 2050. You know, it's not a problem of lack of money in the financial system. Then you talk to people on the project side, the people who are trying to drive the change, implement technology, and they're like, look, we've got the projects, we've got the technology, where's the money? So of course, you need to step back and go, well, there must be something missing between the two. And of course, bankers, investors, when they talk about, they mean bankable projects, they mean investable projects. And ultimately, all investment comes back to a very basic equation, risk return. And again, the number of conversations I have been in around this topic where risk has been on the agenda, and again, there was not a single insurance company at the table, I think tells you a lot. Because if, again, three things I think to take away at a very basic level. The insurance sector is part of the financial sector. I mean, the City of London, it's around 40% of the capital deployed is through the insurance sector. It's capital like any other that comes from the capital markets. It's risk capital. It's contingent capital. It's pools of contingent capital that are sitting there to address risks and issues when things go wrong or something unexpected happens. And there is no capital stack in the world, there's no business in the world that operates without insurance. It's fundamental. So it is kind of strange that it has not been forefront of this conversation. Secondly, it has been a blind spot for a number of reasons. The way in which the insurance industry has sort of changed over the last number of decades. It's become very efficient, very commoditized. And so it's become a sort of annual procurement exercise. And so that needs to change. It needs to be at the top table more strategically. And we absolutely have to move away from this annual renewal model, which does not incentivize the insurance industry to actually address this and start thinking about these risks and even pricing risk on a forward basis. There is no forward price curve for insurance or risk, unlike every single commodity, other commodity and service, which is business essential. And the third point is it is a critical enabler. You know, and I'm going to be blunt. We are simply not going to mobilize the amounts of climate finance, and I think it is, you know, include within this clean water and sanitation, without a massive paradigm shift in the insurance industry. It simply will not happen. And so we have to bring insurance to the table. We published a paper last week, and I could say a lot more, but actually you'd probably be far better off downloading the paper, The Great Enabler, which sets out exactly why you can't mobilize climate finance without this paradigm shift in the insurance industry. And even better than that, because we have all these high-level papers and concepts, it sets out 11 case studies which effectively illustrate that many of the insurance products are there. They are just not being deployed at the level and scale and the amount that actually could make a fundamental difference. And I will leave it there because I'm sure we'll have other questions and there's a lot more to talk about.
There will be, definitely. Thank you so much for that elaborate introduction. Andrea, please take the floor.
Thank you very much. I'm a director in EIB Global, which is the part of the EIB that takes care of the activity outside the EU, and there I cover private sector activities, so corporates, project finance, and equity. And as I mentioned, what I would like to today highlight, it's a bit the EIB overview on the water sector. We heard some numbers. We know that the need are daunting, but we also think as EIB that there's also a great opportunity to have an innovative approach and trying to find innovative solutions to these problems. And as I mentioned, why am I here? It's because water is recognized not only by the bank, but in particular, if you look at it outside the EU operation, as one of the key activities that we bring forward. As I mentioned, if you take the overall activities of the bank, the outside the EU activities are nearly 10% of the overall volumes. But if you take water, 30% of the water projects financed by the bank are outside the EU, which testifies the importance of this sector for the bank. What I would like to mention to you. Yeah.
I hear you again.
A bit up and down, right?
I think I know just the other day, if you hold it near the top, if you hold it at the bottom, it sort of interferes.
Okay, thank you very much. So what I would like to give you is a bit of a few ideas of why the EIB consider water so important. And the first thing that I want to mention is that, of course, water is a very broad segment, and it encompasses a lot of subsectors: water supply, wastewater management, reuse, desalination, stormwater management, flood protection, coastal restoration. And beyond addressing immediate needs, investment in this area are critical for what we consider extremely important, which is climate adaptation. And in 60% of the EIB, climate adaptation finance came from water. And so if we want to use a slogan for water, we could say that water is to adaptation what energy is to mitigation. And recognizes the importance of these, as I mentioned, the EIB has decided to elevate its financing to the water sector from the actual 3 billion to nearly 4, even 5 billion going forward. And a new paper is being prepared to propose what to do in the near future. The second point is that we need to expand approaches to financing and innovation. And addressing the global water challenges required, in fact, innovative solutions. And the EIB is trying to diversify its approach, as I mentioned, both through the private and the public sector, utilizing blended finance mechanism and hence enhancing the technical advancement. One example that I want to bring to the table is something that will be discussed even later, is the Water Access Acceleration Fund, which is a landmark private equity fund which has two defining attributes in our view. First of all, it's the first of its kind in its mission, and it's the first private equity fund which is focused on enhancing access to safe and affordable water in developing countries. This is something that we hope will pave the way for future initiatives in the same sector, so that from one we will go to two and etc. And we will then have a full sector of private equity investors in this. The second is the catalytic role. I mentioned it already before. The EIB committed 10 million euros to this, and this has helped the fund to reach its target of 50 million, and it's now well advanced to get to the second or final stage of 75 million, which is very important. What it is important here is that the bank took the riskier part of the portfolio, so the first loss, and this is a role that the bank is happy to take whenever there is something significant, and it's also a demonstration of the fact and to the market that multilateral development bank as the EIB are there, are willing to take the risk, hence the risk in the overall structure, and attracting others to invest in the fund or in these initiatives, except by looking at institutions like the EIB being part of the structure. The third, which is also related to this fund, as I said, target private sector. The issues that we see in water very much are linked to private sector, and especially to small and medium-sized enterprises. And this fund is a private equity fund targeting exactly this, which is particularly important. It's also another angle which is to us is important, which is the gender. If we look at the issues around water, very much they are gender related. 80% of the water transport in the developing countries is done by women or young girls, let's say. So investing in this and trying to help the development of this project it also has a significant benefit on the gender angle. By the way, this fund has committed to the 2 times gender commitment, which is also important. And finally, I would mention once again the importance of blended finance. As I said, the issues are huge, and one of the key enabling factors for us, but in general, has been the fact that the EIB is now managing this water sector fund, which has been entrusted by the government of the Netherlands, which has promoted investment in the water sector. And this is a very significant example of what public institutions like us, private investors can do in order to overcome the issues in the water sector. Thank you.
Thank you so much, Andrea. And let me also ask you a question immediately, because you're talking about scaling. It's important that, you know, we have many asset managers to start embracing investing in water. And your first allocation in first loss structuring has been to Incofin Investment Management. And we have the co-CEO here who will address the Water Access Acceleration Fund in more detail. But from EIB perspective, what is it that you run into? What are the challenges if you structure first loss in the water space? Because of course there's not been an extreme long track record when it comes to addressing SMEs through private equity in the water space. Can you speak to that a little bit from your perspective?
Yes, of course. I would say that the first issue is something that we all have mentioned, is the funding gaps. I mean, the needs are huge, and indeed also the EIB alone, despite being the largest multilateral in the world, cannot address these issues, of course. So this is something, as the colleagues were mentioning already, something that we need to work on together to find a solution. Specifically now, if we look at the water sector, we do a lot of equity investment. Water has a significant hurdle for private equity, which is that it's a very long-term perspective in terms of return. You cannot expect to have immediate return in this sector, which is also limiting the private equity, the private sector investment in this specific sector. So what we need to find is long-term institutions like us and others which has invested, which have this long-term perspective, which are able to stay in the fund longer, let the fund develop, and then have, let's say, a return which maybe are a bit lower compared to what you could expect from the market in other sectors, but obviously you need to have a balanced approach and risk-return approach in this case. The other problem that we see as a bank is that we see in this sector a lot of inconsistencies in the institutional and the regulatory frameworks. They vary a lot, they are very different, and obviously having a constant, well-defined regulatory environment is extremely important for the investments, especially if you want to attract private sector investments. If there are issues, private operators will move away and will invest in other sectors or in other geographical areas. So this is a key factor that we try also to help by providing technical assistance in order to develop this framework. And I think that, maybe these are the key issues that I want to...
Thank you. It's very important. And then that's a nice bridge. Ankat, I wanted to ask you, beyond allocating capital, beyond structuring first loss and catalytic instruments, from your perspective, what is it that you see that you can address, being responsible for MENA within the Green Climate Fund, to actually make it work and get more investments in the sector? What other instruments or what other interventions do we need?
Yeah. Thanks, Josie. I think before I take this, I think we really need to understand what are actually the key barriers here to invest in the water sector. But also, is the water sector really an investable sector? The answer is yes, it is, through adaptation, through mitigation aspect. And if we look at the recent World Bank report with the investor perspective, it was very clear water become like a priority sector between investor for America, for Europe, for Japan, for many other countries. But it's still not in Africa, not in South Pacific, not in MENA region as well. So there is a challenge there. And I think that challenge comes because the water is really underpricing, and that doesn't mean we are promoting even the water pricing concept, because water needs to be maintained as a public good. Also, water projects are really require a lot of upfront cost. and also they become very specific in their context, in their design, in their local aspect as well. But also they normally lacking that operational maintenance aspect, especially if we talk about public water projects. So if we talk those barriers or understand the challenge or the risk where they actually put the investment or the investors to come and invest in the water sector, we try to see how we can, as GCF, using our capacity in terms of the risk taking, our ticket size, but also the type of financial instrument that we work across. So in GCF, we work across like grants, concessional loans, guarantees, bond, and so on. And we try to see how we can actually use those financial instruments, the risk take appetite that we have, and also the ticket size that we have to be able really to bring water sector to become investable and also to attract more private sector. But we have to ensure like bankability, of course, of the project, and also we need to maintain affordability. And I keep insisting on affordability because bankability, yes, you can turn the project to be bankable if you start looking at the whole value chain in the water sector and you look at the whole circular economy aspect. But affordability need to be maintained. It's not just affordability for sub-borrowers or the countries, but also affordability for the end user. Because we have to maintain water as public goods with no questions. It needs to be accessible by everyone. And I would like to give an example we have did in GCF, where we've been able really to use the capacity of grants, the capacity of concessional loan, and take really the upfront cost and take also the first loss in the capital as well risk to bring like a change or a paradigm shifting in the wastewater reuse. And we did one project in South Africa that was 1.5 billion project. And that was by developing like, if you look at the the South Africa water system, so they have over around 60 plus water utilities that most of them under debts, most of them probably very close to the bankruptcy as well. But they have to work on wastewater rehab, wastewater reuse new project to be able really to mitigate or minimize the gap between supply and demand and continue meeting the supply requirements. So by taking that challenge, which is again, it's a trigger by climate change, we'll start thinking how GCF can really work with the South African Development Bank, the DBSA, try to do a paradigm shifting within South Africa for wastewater reuse. So we design a program with them where we have put like a technical assistance that's fully funded by grant from us, and that really to support the water utilities to bring their project into design, to cover all engineering costs, to cover all site selection, environmental assessment, all what is required, even including designing the financial model of that project and ensure really the project is well designed and it's really bankable. And then we have a second facility or a second component that comes with a concessional finance. And with our concessional capacity, we've been able really to have an agreement to lower the market rate between 3 to 5% based on the scale of the wastewater reuse project. And we just put like 200 million from our concessional finance into that facility. And you cannot imagine over a time, which is a very short time, 6 months, those 200 raised up to 1.2 billion. So that again show like there is a clear interest in the water sector to invest, and that we're coming from not just the DFIs, but also we're coming from asset managers, from pension fund as well. And we started getting those number of calls asking like, do you have any other program similar? Because we have to, when we look at the market in South Africa, we cannot go more than 1.5 billion in total. So we kept it at that. But there is a clear request, there is a clear demand from the investment if you really find the right structure for them. So we currently developing similar program with EDB for South Pacific, and that again, it's 2.5 billion project. And we try to look at, can we do also with the African Development Bank for Africa? So we are in a very early discussion with them to bring again similar program with African Development Bank for Africa as well.
Thank you so much, Amgad. And my final question in this panel is for you, Anthony. Over the past week, I've heard you address the fact that the cost of inaction are so large that we cannot ignore this as a fact, isn't it? And so my question to you is, how does the insurance industry tackle these kind of questions? Because of course you have a fiduciary responsibility, but also at the same time you're able not to only allocate a lot of capital, but my question specifically is, how do you feel that your role can be in the de-risking, in the catalyzing instrument space?
That's a very good question. I mean, and very quickly, when you say we have a fiduciary duty, we do as a broker. So just a very quick lesson, because I think the level of understanding, and it's a learning curve I've been on for the last year, of the insurance industry, I think often is quite limited. There's three main components to the insurance industry. There's the reinsurers, and there's actually not many of them. They're sort of in the tens, Swiss Re's, Munich Re's, etc. And they're the ones who sort of spread the risk from the primary insurers, the carriers, and there's hundreds of those. And just to remind you, the point I made earlier, the money comes from the same place as the rest of finance, from the capital markets. And then you have the brokers. And so Howden is a broker. Now, as a broker, we're highly regulated, and we owe a fiduciary duty to the client. The insurance companies actually don't. And what's been quite interesting, I spoke at an IDFC event in Cali as part of Mobilizing Nature Finance, and a number of the big MDBs and a couple of the APs said, well, we've been working with this insurance company or that insurance company, and actually in the end what they could do was sort of quite limited, or they couldn't quite do everything we wanted. But that's, if you just work with one insurance company, I mean, that's going to be the restriction. We as a broker can go out to all of them. Howden we're privately held, we're not listed, and we are taking a very broad definition of our fiduciary duty and role as a broker to almost do a multi-stakeholder broking to try and catalyze this shift. So coming back to your question, actually, in reality, very little. I mean, let's be blunt here. The insurance industry, yes, has been speaking a lot about this for the last 30 years. They've got better at modeling risk, but on a very reactive, defensive basis. To be able to model risk so that they can ensure that the premiums that are being charged, are less than the risk and the sort of events that happen. But not on a proactive basis in terms of stepping up and going, actually, how do we use our skill set to price and de-risk the resilient net zero transition? And that's the shift we think has to happen. And a fundamental part of that is shifting away from this 12-month model to then incentivize the insurance industry to start thinking about risk, not just in the next 12 months, but actually over the next 10. And then what you might have, so if we take the recent horrific events in Spain, is you might have the Spanish government sitting there, or any other government, going, here's my contingent risk profile for these major events over the next 10 years. Actually, it makes a lot more sense for me to deploy more capital now on resilient infrastructure to reduce the cost of that and help me address that contingent liability. Whereas without that visibility in dollars, not in a qualitative form, which is where most of our climate data is, you're not going to make that decision. You're not going to spend the extra. And the other thing that doesn't happen, I think, to your question, is you do not get climate let's just call it climate aware or climate relevant underwriting. At the moment, other than a few interesting case studies, what you do not get is a premium that is effectively assessed based on the fact that you've invested more in making your business or your infrastructure or your city more resilient. And we think that should start to happen, but you need that forward price curve on risk. And I think that's a critical change we want to see. It's not necessarily easy, but it's essential, and it's the same on the finance side. As we go from a world which is changing, we need to move from backward-looking data, from using the rear-view mirror and statistical data to assess risk, because that doesn't work anymore, to how do we price risk on a forward-looking basis. And what you have to bring together is all of the data sets that are emerging, work out what data is missing, bring that together with new technologies like AI and we launched a new platform called the Resilient Laboratory with Microsoft in New York, and then the models and the scenarios, the science models, the pathways for economic change, and so on, and then be able to assess risk and price it critically in dollars on a forward basis. Then I think we could start to be, addressing this in the way I think your question is looking for.
Yeah, thank you so much. And I think that if we want to build more robust infrastructure that is able to deal with these kind of challenges, the average figures in low and middle income countries are that we need to invest 20% more. But often it's also, mitigated by the cost of repair over time. But then you need to have like a forward-looking kind of estimate, isn't it?
Exactly. Can I just make one more quick point? I won't go into detail on this, but I think just to put it out there, because we've talked a lot about concessionary finance and the role of the MDBs and DFIs, blended finance. What we believe we need, again, is we need to start working from first principles here. We also need blended and concessionary insurance as a critical counterpoint. To get that spinach, it's like the can opener, to get the spinach out of the can, or yin and yang. You are not going to build self-sustaining climate finance markets if you don't also invest in ensuring that you're bringing the private sector insurance industry in. And in the same way that you have to do blended and concessionary finance to bring the private finance sector in, you're going to have to do blended and concessionary insurance to bring the private insurance sector in. But in those countries, you need those commercial insurance markets, or you're going to be reliant on MDB and DFI and public money forever, and there's not enough of that to achieve the leverage we need.
Thank you so much. And I want to finish off the panel with these words, and thank you so much for your extensive and wonderful contributions. I'm going to invite the next panel on stage that is actually going to speak to investments and examples that we can give you. Thank you so much. I want to welcome on stage Paul Buysens, Arno Keizer, and Gary White. Paul is the co-CEO of Incofin Investment Management, and he has been working for Deloitte and General Electric in the past. The assets under management of Incofin Investment Management are 1.3 billion. And with specifics on water is that with the first fund that is being set up, they aim to achieve safe drinking water for 30 million people. Arno Keizer, he's my colleague from Aqua for All. Welcome on stage. You're the lead impact finance, and you're responsible for structuring the first laws, all the work that you do on the blended finance side of things. And of course, we have Gary White. Gary, you're famous. You've been one of the first that actually understood that we needed to link to private capital for the water space. You have established water.org and Water Equity. You've been paving the way in the industry that is exemplary for so many others that are out here. We are extremely grateful, and we're still applauding a lot of the work that you're doing. Thank you so much for joining us. Can I invite Paul to do the first introductory remarks, and then we'll continue.
Yeah, so I'll start with, we've talked about the Water Access Conservation Fund. I'll tell the story how we came there. So a couple of years ago, we had a strategy meeting with our leadership team in a small hotel in the middle of the largest Belgian forest. And we decided that we would focus only on two sectors: financial inclusion and agri-food. And then our founder, who was there with us, got a phone call. So he got out of the meeting room, and 5 minutes later he came back very enthusiastically. And he said, I have a new opportunity, I just talked to Danone. So we asked, is it an agri-food opportunity? He said, no. Is it a financial inclusion opportunity? He said, no. We had just agreed to focus on those two areas. He said, it's water. So we looked at each other, And we were very much solution-oriented at Incofin. And one person said, but water is liquid food, right? So we had a solution. We went to Danone, and we went to Paris to meet with Danone, and Danone told us three things. They said, we have this incubator for water enterprises. And most of those companies has positive impact on low-income communities. Most of those companies are profitable or have a path towards profitability. But none of those companies scale. Why? Because they lack access to capital. So we said that's where we can help. A private equity fund that provides growth capital to those entities. So we went back to Brussels. We talked to our team in Africa, in Asia. They looked at the market and they realized that there are many entrepreneurs out there who are building companies that provide access to safe and affordable drinking water to low-income communities. Companies that are not just socially conscious ventures, but thriving businesses. So we went back to Paris and we told Danone, look, we have our first ingredient for a strong pipeline. And we're willing to fundraise, but it will not be easy. Why? Because investors will perceive the risk as being very high. Low-income communities, emerging markets, not many investors that have already started investing in the sector. So we said we need a blended structure, we need a first loss tranche. They said, yeah, we can do some of it, but not all of it. You will have to find other investors. But we had our second important ingredient, an anchor investor. And then we started to reach out to other parties. And we met with Yozin and Aqua for All. They loved the idea and they said, we will help you. And they brought us in contact with the Dutch government, with the EIB, and they helped us with growing this first loss tranche. So the third ingredient was there. We were starting to build those partnerships that went also beyond finance. Aqua for All can help us with technical assistance. Now, we have two goals with this fund. The first one is to provide access to safe and affordable drinking water to 30 million people living in low-income communities. 30 million people, that's the equivalent to the population of the Benelux regions. That's 3 times the population of Azerbaijan. But we have a second objective. The second objective is to prove that you can invest in the sector and make money. Today, 2 billion people lack access to safe and affordable drinking water. With climate change, it's only getting worse, so you will need to attract more private capital to the sector, and for that you need to prove that you can make money in the sector. Our initial goal was to raise 50 million. Today we are at 62 million, and we will probably end up at 75 million. And the parties that are still doing the due diligence on us are really private investors. We have wealthy families, we have also companies. As the EIB already mentioned, we have also banks that invested like BNP, etc. So we have a whole range of investors. And I like to finish with just giving one example of our latest investment. It's an investment that we did last week. It's our first water investment in Africa. It's a company called Spouts in Uganda. And Spouts manufactures and distributes ceramic water filters. They eliminate the need to boil water, and that's a practice that usually uses firewood or charcoal. Yeah, okay. Yeah. The company uses carbon credits in their business model, and that allows them to sell those filters at very good prices to low-income communities. And today, 700,000 people already benefit from those filters.
Thank you so much, Paul. That's a wonderful, very concrete example. Arno, over to you.
Yes, I think this ties nicely to what Paul already mentioned about our role as Aqua for All. So I'm Arno Keizer, I'm the lead Impact Finance. I've been leading a team of managers for several years. Prior to that, worked in traditional corporate finance. So it's also nice to see this development in the water sector space, whereby blended finance is really unlocking private capital. And this is also really the purpose of the impact finance unit. We provide risk capital to crowd in and mobilize capital from commercial investors. And we use for that instruments such as first loss equity, but also technical assistance, really to strengthen the investees, but also the fund managers themselves. And ultimately what we want is really to enable enterprises, which are underlying portfolios companies, to provide safe drinking water access, also safe sanitation. And we don't really limit ourselves to supporting enterprises. We also support infrastructure projects, so medium-sized, small-sized infrastructure projects. And we use for that typically banks, and really banks that are based on the African continent, for example. One of the banks we had a very successful partnership with was the National Bank of Kenya. Together we set up a loan portfolio of 8 million euros, supported by water equity. And that was really to target water utilities, but also water sector projects. And now we also are able to say that we can support another bank in Kenya, the Cooperative Bank, which is really targeting non-revenue water projects. So even more focused on increasing the financial sustainability of the water sector locally. And again, this time in cooperation with water.org. So I think we have here a nice group of partners where we indirectly or directly have a very healthy relationship with. So Aqua for All, as I mentioned, is also focusing on emerging markets. So we really target Asia, Africa, but also the MENA region. We have a portfolio of 15 banks, so also in Senegal, for example. But we also support fund managers, Water Access Acceleration Fund, but also more alternative vehicles that really support in their own way the local market. So we work with Evenpar, a small fund manager in South Africa that structures infra projects together with local developers. But also in India, we work with AC Infra, a different type of investor that's purchasing assets and creating stabilized cash flows. So the way we look at the sector is that even though there are challenges, it is also an investment opportunity. And blended plays its roles in the way that it also helps to alleviate the risk perception which traditional investors still have of the sector. So by building the track record, we basically provide these indicators or parameters to really see that much ask premium is not really needed. And that's really our purpose, that at the end our role is taken on by other de-riskers such as Howden here in the group that offers other types of risk capital at larger scale and more on commercial terms, but still very focused on the high impactful sectors. So our role is really just that. I think I'll leave it at that.
Thank you, Arno. And if we're actually going to be transformative in the sector, even the ones on stage are not going to be enough. So we need to make sure that water investments become mainstream. Like many of the asset managers across the world find it very logical to invest in renewable energy, in agri and food, but in that same list of interesting assets, water should also be on the radar. But we're going to now hear from Gary, that is really been the front runner in the industry, and because of all the work that you've been doing, you've built that track record and that confidence in the market. So please go ahead and introduce yourself.
Thank you, Jocelyn. And thank you for the kind words earlier, and thank you for convening us, because this has too often been on the margins of COP, water, and then on the margins of the margins has been finance for water. So it's really great to see this take center stage. And I'll anchor first in water equity. Water equity exists alongside of water.org, and now exist alongside another company that we created, Water Connect. So just keep in mind there's these three pieces. But I want to anchor first in water equity and what it is. Water equity is, we believe, the world's first asset manager dedicated exclusively to water and sanitation impact in low and middle income countries. And the roots of this are back in 2015, and now we've gotten to the point where we have almost $500 million of committed capital across 5 funds now. We're raising our 5th fund right now, which is an infrastructure fund. That's a $200 million fund. We set this up so that we could do this in a way that would provide competitive financial returns to the market. And we believe we're hitting that. And what water equity does is it raises capital, debt and equity, from the capital markets, primarily in the US, some in Europe now as well, among other investors of the development finance corporations, corporate investors using their balance sheets like Starbucks, Microsoft, Xylem, Ecolab, Caterpillar, so that they can have water impact in the markets where they work. We also have our first institutional investor, which is actually an insurance company. And so that was a good thing for us to find too. And so what we're doing is we have 2 pillars within water equity in terms of how we deploy that capital. First, we provide debt financing to financial institutions around the world that have lending relationships with low-income households. So what we do is we go to that water.org piece of the puzzle and use philanthropic capital to come in and help these financial institutions de-risk lending at the household level so that they can hire people with water expertise, so they can hire people to go out and market water products to households. So water.org has been doing this for almost 3 decades. And what that has done is it's built a confirmed market. So those financial partners that we have, that we invest that debt into, that's a network of over 150 financial partners that have collectively delivered over $6 billion to poor households for water and sanitation. So that is the anchor in which we're able to say, look, there's this incredible demand out there. People are willing to take out microloans so that they can get the water solutions that they need. Oftentimes it's connecting to the local utility. So they don't have the $300 or $400 it might cost to connect to the utility, but they have $1 or $2 every day to buy water from vendors. So what they're able to do is basically get this concept of it's really expensive to be poor. That's what we mean by that. And so those are 74 million people who have now gotten access to water and sanitation through affordable loans. So that allowed us the confidence to go out and develop these investment funds because we knew we had a very powerful underlying asset. These loans at the household level repay at a rate of 98%. So we have a very powerful underlying asset that is going to stand up to scrutiny for investors. The other pillar of what we do is now investing in climate resilient infrastructure. We do that through project finance, and we also do that by investing in growth equity companies that are, again, focused on low and middle income countries. Those companies can be focused on water loss detection and reduction. They can be focused on making metering more efficient, billings more efficient. So we can invest in those companies, but the real thing that we're looking at now is climate resilient infrastructure in our current fund. And that is looking at developing a targeted financial return for those investors in that fund of 11%. So we are really, we believe, hitting that competitive level. And then the final piece is what we hear a lot about, we heard it on stage, is there aren't bankable projects out there. And there isn't anybody that's in this area between the people who say there's all this capital and there's all these projects, but they're not bankable. So what do you do with that? Because that's a high risk area to invest money in, to develop a project, to get it over the hump to bankability. And so what we've done is create a new company called Water Connect. It's a project development company. So it uses its capital to go out and co-develop projects in local markets that we're targeting so that we can build in a couple of things. One, climate resilience into the equation because that's what investors want to see, and taking a lens of making sure that those projects and those impacts, both in terms of water and wastewater treatment, reach some of the poorest communities in those markets. So we bring that to the table. You put all of this together, and what we've done is we've taken all of these weak links in the chain from the capital to the projects to the investors. We've put it all under one roof so that we can, when we go out with water water.org and Water Connect, we can say, what's it going to take to pass the investment committee at Water Equity? And since we're working in partnership across those three, we know what it's going to take to pass the investment committee. Therefore, we have confidence in the project development that we're doing. And Water Equity has confidence that it can go out and tell investors we can find the deals because Water Connect can bring the deals. And so when you put this all together, it not only makes project development companies and utilities want to work with you because they know investment is in the wings, but also allows investors more confidence to say, we're going to invest in your fund because you've already done the work to de-risk this through the project development work and through water.org. So we can use the spectrum of capital. The water.org philanthropic capital, we're using that. We're putting $4 million into the startup of Water Connect so that it can have the impact that it needs. When we started Water Equity, we had to put in over $15 million in philanthropic capital to get it started. Now the management fees of those different businesses can get to break even and hopefully generate revenue. So this all, we believe, serves as an under one roof example, to your point, to the market. We're not going to do it ourselves, but if we can show this example and kind of illuminate a pathway for the private capital markets, then what we've effectively done is create the financial plumbing that connects the global capital markets to women making a few dollars a day so that everybody gets a piece of the value in the chain and it all works together and then we can mobilize more capital.
Thank you so much, Gary. That's so impressive what you've been able to establish so far. The bridge to Paul then is an easy one because Paul were talking about the possibility to not only look for impact results but also for financial results, of course. Because if we're going to put in private capital, there can be part concessional, but there's also this need to simply earn money. How do you deal with that, and how do you encounter these kind of things in the market that you're operating in?
Yeah, and before explaining how we do it, maybe say that we're not promising 25% IRR with this fund. We have other private equity funds for that, but not this one. But we're targeting excellent financial returns, like Gary said. Now, we're impact investors, so whenever we take a significant minority in a company, we set up an impact action plan, but we also set a value creation and action plan. We sit on the board and we work on the strategy to make those companies profitable, to help the companies to grow, etc. So with our expertise, we can help them to improve their financial performance. But what we see, there's one very interesting thing that we're seeing here with the Water Fund, is that we're talking to entrepreneurs which had the main focus to bring a water solution to local populations. That's their goal. That's what they want to reach. And now, by talking to a private equity fund, they realize that there are private equity investors that could be interested in the company and that can help them to scale. And so for them, the financial performance of their companies come higher on the agenda. So by creating private equity funds, you create more business, in fact. So it has a positive impact. So that's something that we've been realizing when talking to entrepreneurs.
Thank you, Paul. And Arno, we've been talking about de-risking first loss trenches, but you've also been working on other kinds of blended finance solutions. Can you speak a little bit to it and why it is so important that we have the full range of solutions that we're working towards and see what's being picked up and what we're able to scale?
Yes, and I think it's still very much a necessity to have a variety of solutions. We notice in our portfolio that the challenges can be region and country dependent. They can also be very segment dependent within the sector, within the water sector. And I don't think every segment needs its own tailored instrument, but from our experience and just by looking at our pipeline, we do notice that many fund managers have very specific investment strategies, each targeting very specific needs. And one of the examples is, like I already mentioned, a blended finance facility in South Africa, whereby a fund manager really focused on traditionally on energy infrastructure project, also shifted to water projects, and that's because of policy changes in the country, making it more attractive to really, as a private equity investor, structure projects together with local developers, and also raising private capital and promising these high typical private equity returns. And what you see is that as a partner, as Aqua for All, you can bring a lot more than just the capital. We are first loss investors in such a structure, but what they really seek is a partner that can also support them in really understanding the sector. So we provide technical assistance to their projects, just to strengthen them a little bit more so that the bankability or investability increases. And we also provide them access to water experts. So this is just one of the very typical example that we expect to see more often in the future. And in India, there's another example which is also very typical. It comes from a traditional ID several years back, or actually decades back in Scandinavia, whereby hydro plants were structured by a Swiss investor and packaged and then sold to institutional investors, so to say. And what they did is they structured a comparable setup in India, whereby they purchased sanitation assets, which are typically not purchased by local investors, and they try to improve the financial viability and also package them, but also thereby creating more access to safe drinking water and sanitation. But all these type of structures, they're very much in a pilot stage, and you do see appetite of regular equity investors, but there's still something needed, right? Really to make them not only financial sustainability, but make them able to really also steer their investment solutions to impact, and also really to water, which is again an added layer of complexity, because not every fund manager understands what water specific indicators which one exist that impact investors such as us or other fund investors want to see before committing capital to such instruments. And blended structures is something that I definitely still see being needed. So Water Access Acceleration Fund is a great example. But what I also see is that there are big infrastructure secondary investors that are very interested to provide larger scale tickets in the sector, but there's still a lot more funds needed that have a more significant size before we can actually crowd them into the market. So the blended structures is, I think, definitely something which we'll keep on seeing, and that's also what together with the funding from the Dutch government, we really try to mobilize private capital. But it's really what we try to do, to really make sure that viable structures are set up, that the investment projects become at a larger scale into such a point that it attracts the global capital market or the larger infrastructure investors that are already existing. So yeah, that's just...
Thank you, Arno. Yeah, very interesting. So Gary, my final question in this panel is for you. I wanted to touch upon the fact that if you look, for example, in Kenya, 70% of the population depends on private operators, and 23% in the market is being serviced by public utilities. I want to talk about utilities in this important case, because when I started 5 years ago as the director of Aqua for All, it was regarded as impossible to also get commercial capital to utilities. And now 5 years later, we're here on stage. And last week we signed a joint project in Kenya, where we have found a bank, the Cooperative Bank, that is going to actually focus on financing utilities. And you, from your expertise, how have you enjoyed the journey towards actual utility financing? Because it's been hard and it's been bumpy and it's been regarded as impossible.
It has been, and I think what we've seen is that happening organically from the bottom up. As a lot of our financial partners around the world have loaned for household level loans, they've also gone up market, and now they are also using our technical expertise to break into utility finance in countries like Kenya, but also as we look up into larger cities, not the mega cities, but the secondary and tertiary cities. That's our target market. And that market is experiencing all the same problems that we've been talking about. And for us, we believe we have cracked the code, in a sense, on this spectrum of capital, blended finance, because we've taken all three of the pieces with Water.org and Philanthropic Capital and Water Connect with the investment capital and Water Equity with investment capital. We put all of that under one roof in a single enterprise so it can work seamlessly across the value chain to not only have the big end of the funnel to generate opportunities, the Water Connect to screen those opportunities and to tune them up to bankability, and then Water Equity with the dry powder to invest in this. And that, I think, we believe is taking a lot of the concepts that have been in this space for so long and integrated in a way that it is one business. It is under one management structure that we can do this. And to me, the question we often get at the end of these panels is, what can I do? And I think we have on-ramps, we have action. On the Bezos Earth Fund provided $10 million grant to us to kind of seed a lot of this work. So we have philanthropy. We have these investors in Water Connect to help develop the project. So Coca-Cola actually invested in our Water Connect company to be able to do this. And then, of course, we have the straight-on asset manager that's registered with the SEC that has the dry powder to then put into these deals to co-invest alongside other investors, again, getting that leverage. And I think that's what we have seen by working in this space for 30 years and saying, piece by piece, how do you solve each bottleneck along the way and remove the barriers so that we can get to this fluidity, if you will, of investment.
Thank you so much. Thank you, panel. There's two more people that I'm going to give the stage. Very important, because now we're going to talk about what's next and how important it is to work with the government to also crowd in that much needed private capital. Big hand for this panel, and our final panelist, please take the stage. And then in the final panel, it's Jason Morrison and the Commissioner of Health from Uganda, Mr. Nabasa. Please. Welcome. So Jason, you've been the CEO, the head of the CEO Water Mandate as part of the Global Compact. Thank you for joining, and it fits in very nicely with the words that Gary ended with, also when it comes to corporate investments. And we have the Commissioner, Mr. Nabasa. We've already had an introductory conversation, and you're known to promote the public-private collaboration to make sure that the budget that we need for Uganda to have access to clean water and sanitation solutions for everyone can only be ready if we work with private sector. Thank you so much. Can I please give you the floor to do your first introductory remarks, and then I'm going to hand over to Mr. Nabasa.
Sure, thank you. I've really enjoyed this conversation. I've learned a bunch already. I'm going to come at this topic from the perspective of corporates that have been increasingly interested in investing in water, much beyond how they historically have been thinking about the topic to meet their water stewardship goals. So many companies either have been making these investments through their operations or their capital investments, but not balance sheet investments, and I'll come back to that, or through philanthropy in order to be able to meet a WASH goal, the water access, sanitation, and hygiene. What's changing, and where I think there's a huge opportunity to bring many new investors into the fold, are these leading companies that have been mentioned today that are working with Gary. Danone is one of them, one of our members, Coca-Cola, Microsoft, Ecolab, Starbucks, that I think were the ones that were already named today. These companies have come together under a coalition called the Water Resilience Coalition. And this is really about companies understanding that we are not making sufficient progress on water to achieve our SDG 6 or to build more climate resilient regions and water systems. And so some of these companies have been making climate investments in the mitigation side for 10 years now, but not many have been doing this for water. And there aren't actually as many instruments to invest in when it comes to water, although that's changing as we've heard today. But there's many that are just new to this topic, companies that have been leading on water stewardship for a long time, but that have never actually thought about the approach of using balance sheet investments for water. And that's one of the things that the Water Resilience Coalition has been doing, is bringing investable opportunities in front of our members and soon other members, and I'll come back to that, to scale the investments that we have to reach our long-term goals. So the Water Resilience Coalition, one distinguishing factor, it's now 40 companies, almost $4 trillion in market capitalization, have set a shared goal of having collective positive water impact in 100 water-stressed basins by 2030. I'll come back to what that means. And then specifically to enable climate-resilient water access, sanitation, and hygiene for at least 350 million people by that same time. So the 100 basins were established in collaboration with a range of organizations working with corporates on water. It's where over 3 billion people live. And when we think about positive water impact, we're talking about water quantity, the water supply and demand balance, water quality, and then access to water for the poor. And how those issues play out in particular basins is very different, of course, as you would expect. But when we look at trying to build more water resilient basins, we have to figure out where are we now, where do we need to make the investments to get there. And a lot of the on-the-ground partnerships that companies have been investing in, they've been doing it either through philanthropy or through their OPEX, but realizing that the gap is just too big and you cannot get to the amount of investments that are needed unless you take a different approach. So an example of how this is working in California under the California Water Resilience Initiative. This is one of the 100 regions. And a goal has been set to realize 1 million acre feet of water by 2030. And there's a fund called RRG that is investing in land acquisition and repurposing and groundwater recharge. And so this is the type of investment we're trying to connect our member companies to so that they can achieve this and narrow this gap in water quality that we're seeking. And we're looking now to collaborate with Aqua for All to figure out other investable opportunities on water across these basins where we're operating. And these are also the same basis for how Gary and Water Equity have been working with a number of these companies in these regions where they have operations or supply chain or is a key market to the company.
Thank you so much. Mr. Nabasa, please continue with your introductory remarks.
Thank you so much, Jason. Again, my name is Dr. Nabasa Herbert from Ministry of Health, Uganda. I head a docket of environmental health in the Ministry of Health, which is largely responsible for preventive health and ensuring that the burden of disease is reduced through engagement, community support, community health support, private sector support, and coordination of all other sectors. The conversation is interesting. The role of private sector in financing WASH and financing climate change is a conversation that is interesting. It is a new conversation that we need to take on using a whole of society approach. And in Uganda, we have taken this very seriously because we know that the intersectionality between government and private sector and possibly the private financing institutions is very key and fundamental component. To do that and effectively achieve that, we understand that we need to bring these people on board on a round table of our conversation. We are speaking about the private sector that has been really in a long time not so much connected with governments, for instance, doing their private investments with limited support, sometimes with a policy that does not enable them properly. And so to contextualize this conversation, as a government, we thought that it is important to bring them on board fully through establishing a coordination mechanism. So this coordination mechanism brings now the sector on board such that we discuss the policy that favors them. We discuss the environment that can enable their business investments, but also to explore the areas that are hitherto been less invested in. And so we are now on a talking table. We are discussing options to how to incentivize the private sector engagement. So we're speaking about banks, we are speaking about people who are in, providing solutions for sanitation services and products. And so these are now fully aligned with our conversation. The next step is how do we bring on board government fully to utilize government financing to be able to catalyze the private investment options. We've tried out with a few projects that we are doing with SHF, Sanitation and Hygiene Fund, through a market approach. This market approach, we have piloted a few districts where we brought on board the private players to be able to invest in wash products, sanitation products. And this has enabled the communities to fully come on board. By doing that, it has been easier to invest using cheaper resources. When you look at, for instance, establishing toilet facilities, before it was very expensive for communities to establish a toilet. But now when you bring a private practitioner on board, especially the hardware shops, to be able to provide mechanism for establishing a very cheap toilet option by rationalizing, for instance, cement, by training the masons that are within the community itself, providing cheap labor, it has been easy to establish that actually the private people or private investors can be part of the community through a whole society investment approaches. But the other thing to discuss about is how do we fully align leadership? Because you also know that to be able to enable the private investments, you need the government that is well aligned to the private investments. And I think this is something that we cannot shy about. So we are talking about private sector coming on to unlock the lots of investments that are available. So as a government, we did a number of background studies. Some of those studies are helping us to underscore and understand the space better. We did the sanitation economy. We discovered that within the sanitation economy, again, we are trapping over 3 trillion shillings. That is investable potential that we need to unlock. And how do we unlock this? Is to enable the private people to come in, but by incentivizing them, provide options for them, but also ensuring that the policy actually enables them to invest in this area. The second thing is how do we understand the burden of the problem? Because the private people or private sector are part of the society. We are not talking about rocket science here. We are talking about the investment options by the people that are part of the society. What are we talking about in terms of burden? We are talking about how climate change is ravaging economies and how it is affecting society. The role of the private sector should be part and parcel of the conversation to reduce this burden. So when you look at the indicators, for instance, for the disease, malaria itself, for instance, in Uganda, we lose 54 people per day. When you look at diarrhea, the wash-related diseases, we are losing, especially the under 5s, we are losing about 20,000 children every year. When you look at neglected tropical diseases, so that the landscape is not very good, but so the conversation about this burden must bring on board all the private practitioners on board, such that they look at it, they look at the solutions, and look at how they can finance these solutions. And so we are looking at how we can market this, but also to create an enabling environment so that we are able to finance the gap. So now what's the role of the developing financing institutions, for instance, is to catalyze the whole landscape, such that anybody who comes in this space is able to make returns on investment. Again, we have done a study called Cost of Inaction. It has revealed how much governments are losing in terms of the options that would be investing in other development infrastructure. It has also given us the returns on investment. For instance, for every $1 that we invest, we are able to save $10. So the $10 saved can be reinvested into other infrastructure that are meaningful for governments. So to make government appreciate and are able to support the private sector investments is very critical, something that we need to take on as governments.
Thank you so much. There's been so many important things that you've said, and coming from you as a government representative responsible for health, it is so clear that if you invest in water, you also invest in health. And there's a lot of savings to be made, but also, of course, when we look at the context in which we operate, the needs for investing in water and sanitation solutions will only grow over time. Thank you so much. And the bridge back to, of course, Jason, you work with your members and their corporates. And we have already talked about the whole space of insurance, DFIs, impact investors. But then, we wanted you on stage as well because you represent a very important group of organizations, of large corporates that do have a stake in making sure that fresh water continues to be available, but also work with their own employees that are in their spaces of operation for them to have access to clean water. So there's so much benefits to corporates if you invest in water. And now you've been doing a lot of work in mobilizing them to provide investments in this space. Can you share a little bit on how the discussions with your members has gone so far?
Yeah, I'd like to do this evolution. I want to tie back to some things that you've said as well. The types of investment that are happening through these large companies is significant, but not at the scale that we've talked about at this in this panel before, but can be very catalytic nonetheless. Where many of the companies started with their investments in water really just at the beginning of time is around operational efficiency in your sites. But over the last 20 years, companies have realized that the risks that they face around water mostly manifest outside of the site and the site's operation. And therefore, you need to start thinking about the way that water is managed in a particular watershed or a basin. And once you start thinking about that risk, that gets companies to invest outside of its factory fence line, whether it be for a nature-based solution or through community investment and recognizing the need that employees don't have water in the communities that they live, and there's a kind of a philanthropy orientation initially. But what the leading companies started to realize over the last 10 years is that no matter how good the partnership they've had with a great water access and sanitation NGO or a great conservation NGO, like the big players that we would all know, those were not adding up to de-risking the basin or changing basin conditions at all. They're great bilateral partnerships and they can help the company offset its water footprint, but at the end of the day, with climate change, with its shocks and stresses and its extremes, these systems were getting more and more unreliable in terms of water supply for the company. So think of it as enlightened self-interest, however you want to think about it. Therefore, the recognition that you need to start thinking about the investments at a higher scale and in a way that brings more of the peer companies and stakeholders in the regions that are going to make those investments together. And that's the journey. So, but it will unlock a bunch of other things as well. So many of these companies will also have a nature strategy and nature goals, or they may have health-related goals for their workforce and the communities where they're working. So some of the work that we've done recently over the last 5 years is to try to show how investments in water and through nature-based solutions have all sorts of co-benefits, whether it be for economic livelihood or climate mitigation or biodiversity, and we've come up with an accounting framework that enables companies to do that. Likewise, last year there was a accounting framework that showed how investments in water access, sanitation, and hygiene can lead to human health outcomes or economic livelihood outcomes. And it's once you start understanding the co-benefits of investing in water that you can strengthen the case that companies can get to, yes, we see how this investment's going to be a stronger one, not only for our own financial returns, but for the societal returns for the community. And so we're trying to increase that business case. And I think now that companies can see that extended case and can see the mechanism through which they can invest with other companies, now you can start to unlock something that's a little bit more at the scale that can change conditions in these basins.
Thank you so much. we're a little bit over time already, but I want to give the final words to you, Herbert, because I think, listening to what's been said here, how we are interested as, investors and DFIs to actually mobilize that private capital. I think, where we do it ultimately is the countries that we are dedicating our investments towards. So you, as a representative of the government, can you share final words, very concise, please, on how you see this panel come together?
I think what is evident and what is actually clear is that the private sector cannot work alone without governments. Governments must support the private sector because they are the ones that provide an enabling environment and the policy that supports private investments. To de-risk the banks, for instance, they need to understand that the government is on their side and the products that they're going to take on as a way of investment can actually have returns on their side. Because, to stake their money there, they must be sure that actually they can get something out there. So it's a space that needs to be investable, so government must support private investments to come on board fully. How do they do that? Is first of all to integrate the private investment in some of these areas in the government policy, but also to ensure that government also increases the public financing in the areas so that they can act as, shock absorbers for the private investments that are coming on board. So the intersectionality between government and private sector in this kind of whole arrangement is very key. Second, we need to, from outset, bring the private institutions on board in our conversation so that they are not brought on to invest in money when actually they don't understand the whole space, the whole landscape. And then the fears and the risks cannot be very well appreciated, and later on they are able to invest in the projects. Yes.
Thank you so much. I also want to thank this panel. Jason and Herbert, please give them a warm hand. And I'm going to finalize this panel. It's been a very rich conversation. I hope that all of you have this sense of urgency to start working with private sector to mobilize this much needed capital. And I want to thank you for your interest, listening into the conversation, and a big hand to all of the speakers of today. Thank you so much.